Welcome to Whiteboard Wednesdays, Real Talk with a Realtor. I'm Sharice Wynn, also known as the Agent Lady. And today, guys, we have Josh Buchter. Did I get it right?
That's close enough.
All right, close enough. You want to say it again?
It's Josh Buchter with Better Qualified.
With Better Qualified. And today we're going to talk about prepare your credit for home buying. So, Josh, what do you guys do for people and their credit and all that stuff?
Yep, we specialize in credit repair.
Okay.
It's been keeping me busy personally for 7 years now. I work with a lot of real estate agents and loan officers who are constantly turning down clients because of credit issues.
Okay.
The idea in working with myself and my team at Better Qualified is instead of saying, sorry, your credit's not where it needs to be and move on to the next client, you give them a viable option to get their credit right with Better Qualified.
Okay.
And that's where we step in.
Awesome. So what's in the score? What's this pie chart here? Can you break this down for us?
Absolutely. I figured if I break down this pie chart real quick in less than 5 minutes, it'll give people an idea of what goes into your credit score, which is going to allow the viewers to understand what they need to do to improve the credit score. So first, it's important to understand that there's 3 credit bureaus. There's Equifax, Experian, and TransUnion. All three credit bureaus are very important. Each credit bureau reports a score which ranges anywhere from 350 to 850. It's the middle credit score that counts for mortgage qualification. So not the high score, not the low score, but the middle score that counts. You want that middle score ideally to be at least a 620 or higher. Some lenders can get you by with a 580, but there's going to be a lot more hoops and obstacles to go through. So ideally you want your middle credit score in the mid 600 range. Obviously the higher the better.
Absolutely.
The biggest piece of the pie chart at 35% is your payment history. So if you guys remember one thing from today's little video, remember that one 30-day late payment will drop a credit score 50 to 100 points overnight.
That's a lot.
So being late 1 to 2 weeks is one thing, but once you hit that 30-day mark, that's when the credit scores drop. So avoid 30-day lates at all costs.
Wow.
Yep.
So quick question, when you look on your credit report, it always shows, it shows 30 days.
Right.
So it won't show 30 if you didn't hit the 30.
Exactly.
Got it. Okay.
Yep. You might get hit with a late charge or something like that from the creditor, but it won't report to the credit bureaus until the 30-day mark.
Got it.
Yep.
Okay.
As a rule of thumb, it's a 50-point credit score drop for a 30-day credit card late payment, a 75-point credit score drop for a 30-day car loan late payment, and a 100-point credit score drop or more for a 30-day mortgage late payment.
Well, guys, don't be late. That's good to know.
Exactly. Put your payments on auto pay, set alerts, do whatever you got to do to avoid those 30-day late payments.
Okay. Awesome. Thank you.
Yep. The next piece of the pie at 30% is amounts owed. So anybody with credit cards out there, it's important to keep your balances at 30% or less than the limit. So if it's a $1,000 limit, keep the balance at $300 or less. If you're struggling with high credit card balances, I know it's easier said than done because you got to come out of pocket to pay those balances down.
Right.
A good trick would be to call up the credit card company, mention that you're considering transferring that balance to a different credit card company with 0% interest. A lot of times they'll do just about anything to keep you as a client, including raising the limit on the credit card. So if they raise the limit, that same balance looks a lot better now. You can continue to chip away at that. It's not guaranteed, but it's definitely worth a shot.
That's awesome. Okay. Cool.
15% of what goes into your credit score is length of credit history. So maybe some of the viewers today don't have any credit cards open, no credit history. A good way to establish credit is through secured credit cards.
Right.
You don't need good credit or any credit to qualify because the banks will ask for a certain amount of money up front, usually about $200. Give the bank $200, they'll give you a credit card with a $200 limit. Go make a purchase every month, gas, small groceries, get the bill, pay the balance down, do the same thing the next month.
Right.
You could also consider becoming an authorized user on a friend's account, a family member's account, somebody close that you trust who is financially responsible, because if they have a late payment or rack up the balance, it'll be negatively reflected on your credit report.
Gotcha.
So be careful who you choose to align yourself with.
Quick question. When you get that secure credit card, how long does it typically take for you to establish some credit from there?
Yep, after 45 days, it'll be reported as paying as agreed, and that'll help to boost your credit score up. But usually 3 to 6 months is ideally the length of time you want to see it on your credit report before you really gain the full impact of having that new account.
I guess if you just started off, and I'm not sure, if you just started off and you got a secure credit card because you had none, what, after maybe like 30 days or 45 days, what could you expect to see?
You can expect a 600 credit score. I've had clients with just student loans and a secured credit card, and they have a 680 credit score. So you got to start somewhere.
Right.
So
not bad.
Ideally, you want to have 2 to 3 open active accounts in good standing. So maybe start with a secured credit card and work your way up from there. Once you keep the good good standing with the secured credit card company, you'll start getting pre-approval offers for unsecured credit cards where you don't have to put the money up first. So it's really proven to the bank you can manage your own money before they extend you any credit.
Okay, awesome.
Absolutely. And then the next piece of the pie at 10% is new credit. You want to avoid running your credit report too often. There's a difference between hard inquiries and soft inquiries. A hard inquiry is when you're going for any type of financing, whether it be a car loan, a mortgage, a department store credit card. It'll ding your score about 3 to 5 points every time you run your credit. So if you are getting turned down for any reason, check with a credit professional like myself to see what's holding you back before you continue to run your credit report all over the place. You'll just continue to dig yourself deeper into the hole there.
Quick question. So if you're shopping, say you're getting a mortgage, right? And you wanted to shop around. If you're shopping within that 30-day window, it doesn't hurt as much or something like that, right?
Right. The credit bureaus are supposed to understand that when you're shopping for a mortgage or a car loan, it's going to involve multiple credit pulls because you're looking for the best rate. They're supposed to give you 14 days, a 14-day window to run your credit. So try to keep it into an even shorter time frame of 7 days or less.
Okay, awesome.
Try to keep it concise. Don't shop for a mortgage today and then wait 4 or 6 weeks later because it'll just
ding again.
It'll ding again.
Okay.
The soft inquiries are the consumer credit scores you see online. You can look at those all day, every day, and it won't negatively impact your credit score because it's not a real credit pull. It's more of consumer information, educational scores.
Okay.
The last 10% is types of credit. It's good to have a mixture of revolving and installment accounts. So the revolving accounts would be your credit cards. Installment accounts would be your student loans, your car loans, and eventually your mortgage.
Gotcha.
So it's good to have a mix like that. It's basically a quick rundown on what goes into the credit scores. Remember to avoid 30-day late payments at all costs. Keep your balances at 30% or less than the limit. Establish new credit through things like secured credit cards and authorized users if you're having a problem with lack of credit history. Avoid running your credit report too often when unnecessary. And then the last 10% is to have a good mix of credit.
Okay.
So
that's pretty awesome. Well, I learned a lot today. Thank you so much for coming out today, Josh.
Pleasure.
How do people find you?
Anybody who's interested in continuing the conversation about your credit, we'll be happy to offer a free credit consultation. You can reach me at 267-303-1175. Again, that's 267-303-1175. Our website is betterqualified.com.
Awesome. Well, thanks again for coming out.
My pleasure. Thank you for having me.
Absolutely. Remember, guys, friends don't let friends buy or sell real estate without the agent lady. Make it a great day.